institutions, even though they will probably become competitors for us somewhere in the future, we still believe that one of the ways in terms of growing a business is forming collaborative, mutually successful partnerships that can help grow the business and at the same time continue to serve the community. Hopefully that gets me 12 months free insurance. Thank you.
Let me check on that one. Just to put in South Africa as a leader in the African market, we don't actually consider South Africa part of Africa. It just ruins our insurance penetration level. Africa has less than, if we include South Africa, we're about 2%, I think, penetration level. If we take it out, then Africa's on 1%. South Africa's penetration, I think, is on 12, 13%. It's one of the leading African countries. What I was trying to say is that just having a Takaful product in a market that's open, because one of the main arguments that I always keep getting at this conference is that Sudan is a protected market because we're a completely Takaful market. So I would say that the challenge next year is not only that we'd like to see it succeed, but that would prove to us that Takaful can compete with conventional insurance on an even playing field. And now I'll give over to, we're going to Malaysia.
Which one?
Malaysia, the heart of the Islamic insurance, right? After we invented it, we gave it to them to develop.
Okay, thank you very much, Tarig. The problem with Tarig is that he's supposed to be the chairman and he's taking up my time. So I don't have much time to say anything. I only have, I think, less than 10 minutes. So, and he's talking about business and development and so on, whereas I'm talking about regulation. What's the relationship? Actually, there's a relationship. Business is, regulation is business. And it develops the business in Malaysia. That's why we become better than Sudan after they started it. It's like the, what they call it, the phrase that says, the Muslims discovered the zero and remained there. So the Sudanese discovered Takaful and remained at zero. But we have developed so far, so fast, and because of our, young generation, we have very young scholars who are dynamic. We have here the whole of them, the three of them. Their average age is half my age. Unlike the Sudanese scholars, their average age is 50% higher than my age. So you can see that sometimes we need different, they call it different strokes for different folks. So in Malaysia, in Indonesia, you can see just now that it is sometimes top-bottom rather than bottoms-up. So you can see that and this is where, when we want to make a decision, we have to look at the situation. So Malaysia is different, Indonesia is different, Sudan is different. You cannot use the same thing for everybody. And we have this, they call it Tagayyur al-Hukum bi Tagayyur al-Zaman wal-Makan wal-Hal. Changes in ruling follows changes in times, place, and condition. I know it's difficult for even Brother Tarig to remember that, but you can remember the shorter version. The shorter version is Tagayyur al-Ahkam bi Tagayyur al-Azman. And by the way, my name is Osman, not Kazi Mortuza Ali. I'm not from Bangladesh, I'm from Malaysia. Okay, so this is what happened in Malaysia last time when we started. Before the 1984 Takaful Act, we had the Insurance Act. Before that, we had no regulation. We know nothing about insurance. There's no regulation until there's some American companies that have this surrender value thing. Then we realize, oh, okay, we need to adopt that. And that's conventional. We have no Takaful. So how do we develop Takaful? We follow the British Westminster system. We have Takaful Act, the statute. So how do we do? I don't know how we do it. But, when I was young, we have one halal sandwich. You want halal sandwich? They put the pork. He said, we don't eat pork. It's not halal. Oh, you don't eat pork. You eat beef? Yes. Take the pork out and put in the beef. That's it. But that's not good enough for us. We need something else. But, well, we also have a legal maxim that says, Ma la yudraku kullu, la yutraku kullu. And you cannot do all, do not leave all. Do something. So we had the Takaful Act. And then we had a problem with the 1996 Insurance Act because they don't allow mutual anymore. So we don't have mutual, we demutualization. But in 2013, we had something new. We had the Financial Services Act, and then we had the Islamic Financial Services Act. I have more time, right? Okay. So we look at the development here. I look at only a few issues because Tarig won't allow me to speak too much. So the first one is the IFSA, Islamic Financial Services Act. There are two issues here, the CAR and the nomination issues. And then we look at central bank guidelines and the actions by central bank. And specific provisions to Takaful is, the rest are the same. Whether you want to have this playing field for that, is the same. Okay, the same model and whatever model you want, but it's the same, but except for Section 142, which is important to me, which I think the scholars in Malaysia at least, or in some other countries, need to look into it. Because before that, let's look at the deficiency of Takaful fund on the surplus. We have here that says that if there is a deficit, you provide card. Last time the word if was not card, they use the word Qardul Hasan. Qardul Hasan, not card. But then when people borrow from Islamic banks, they don't pay anymore. They don't pay because they say it's Qardul Hasan. So now they change the word to Qard instead of Qardul Hasan. So here we have a problem here. To me, I have written a paper. You can download or look at the paper. When we say there is a deficit, there's two types of deficit. One is actual deficit, one is actuarial deficit. So to me, you have to treat differently. Actual deficit differently from actuarial deficit. Okay, next one, because we don't have time. This is a Section 142 that is very controversial, but it has become law. I have written a paper on this in 2009, nomination and hibah issues in Takaful. Because what happens, they say conditional hibah here. So when you say conditional hibah, when you go to court, there's a problem. Although the IFSA is the supreme, and you have to follow, but when it goes to court, does it follow IFSA or does it follow the Islamic law? So we have a problem here because conditional hibah is something new. Because when it is hibah, it's not conditional hibah. They say, Brother Osman, but we have hibah rukbah and hibah umrah. Look, I don't understand all this. But the problem is that you cannot use this philosophy and basis to apply here because it's not the same. The hibah rukbah is and umrah is something that is asset that there's a manfa'ah, they call it. But here there's no manfa'ah. So these are issues that the scholars need to look into. And then we have case laws also. When you go to court, we have, for example, Fleetwood in England, and then we have Sadiq Ali versus Zahida Begum in Madras High Court, and Kasturi Lal Jain also. We have Man bin Mihad, Bahadur bin Haji. All these shows that when you go to court, you have a problem with conditional hibah. To know further, please read, because I don't have time to explain. Okay? And then we have the Sharia governance framework. The Sharia governance framework, there must be at least 5 people. And if they make a mistake, they can be fined. For example, our 3 brothers here, they can be fined 25 million ringgit or 8 years jail for making the wrong decision. So it's they are liable for that. That's why I don't want to become a Sharia advisor. But unfortunately, they still force me, but I don't know. I'm trying to say no. But by next month, maybe they will force me to become a Sharia advisor of Zurich. At the moment, I'm lucky because I'm the Sharia advisor about 7-8 ReTakaful operations in Labuan. Labuan, never mind. If I make a mistake in the ruling, they cannot sue me. So that's why I go for Labuan. Okay? But then the fees are much cheaper, of course. No, when we say Sharia governance framework, there are 5 people. They must have a minimum of 5. The green one must be what they call Sharia qualified. That means they must have a degree in Sharia, must have usulul fiqh or fiqh mu'amalah. Then only they have a degree, minimum, or masters or PhD. But the problem with me, I am the yellow one, non-Sharia qualified, because I don't have a degree in Sharia or masters in Sharia or PhD in Sharia. I only have mathematics from the University of London, which I studied here. Although, of course, my students are mostly PhD and masters in UIA. I teach masters and PhD. Although I don't have masters, I don't know how they did it, but they allowed me to teach. Because if they don't allow me, they have problems. Okay? And then we have the new Sharia governance framework. Now, we have the Sharia governance framework. There's a new one. It's not out yet. But there's a slight issue here, whereby under the new Sharia governance framework, the board may decide to follow Bank Negara Sharia Advisory Council resolutions over decision by the Sharia committee, if the latter is more strict. For example, they have a resolution in the, they have published, and then the Sharia committee of the each Takaful companies is more strict. Now, at the moment, they have to follow. Although it's a supreme, but they have to follow the decision of the Sharia committee. But in the new Sharia governance framework, they need not follow. They say, okay, we don't want to follow, you are too strict, we follow Bank Negara. They can do that. So we may have a slight problem because, like in the morning, they talk about ReTakaful. You cannot force Bank Negara, say you can do ReTakaful with conventional. But at the moment, what I have stressed is, for treaty, I said 90% you must be ReTakaful. Only 10% you are allowed to sit out to conventional. But on the facultative and the large and special risk, yes, 90% you can sit out to conventional. So you see, it's different. So when I advise the Sudan Sharia, when I advise the ReTakaful, is different. The ReTakaful, you know what I said? I said, okay, never mind, I give you blanket, you can retro to conventional 100% for the next 5 years. Only after 5 years, I will look at it. You see? So we have to, it's different. The situation is different, so the decision must be relevant to the issues and to the factors. You have to take into consideration many factors. So here under LIFSA, Labuan Islamic Financial Services and Securities Act, I'm doing a bit more flexibility because we need money from, it's offshore, we need money. So when you need money, your decision is different. Okay. I'm not saying that, but this is talking about Sharia. Okay, 1 more minute, don't worry. Okay, a little bit more. Okay, now we have actions by the new, there's a new experiment. I've been many people, since I was a student, I was an advisor, on Sharia. People have problems. One girl has problem with the boyfriend sleeping with another girl, and they came to see me, they asked for advice. I advise because I don't know Sharia, but at least I'm human enough to understand the situation. So I advise. Now, what Bank Negara has done, now I've been asked to advise a stripper. Sharia advice. No, don't get me wrong. I know stripper is a bad word for many people, but it's not striptease. When I say stripper, it's not the male stripper or the female stripper. Here, the stripper means is AXA liability management. I call them stripper. Yeah, why? Because, and these strippers are also same. They are the same, the strippers also, but, and they are also getting a bad name because they strip something and, the access and strip and sell, and they are making problem for some people. But for this one, I'm looking at the situation because not all strippers are bad. Okay, here, what they do, Bank Negara has given them a 1-year license, okay, 1-year license, and they have to strip. They ask me, can you do it in 6 months? I say, I can do, but you cannot do it in 6 months. Why do you ask for 1 year? They said, no, actually, we asked for 6 months. Bank Negara gave us 2 years. 1 year. I said, no, you should ask for 2 years. They said, it's easy to strip. I know it's easy for a non-Muslim to strip, but for a Muslim to strip, it's more difficult because there are many conditions, cultural conditions, and so on. So I'm advising the Amra, they call it Amra, very Sharung, I don't know what but it's a German thing, a German stripper. So they are now doing it, and we can do, we were going to, it's the first time in Malaysia, in Europe, it has been something. So I'm actually the first of many things. One of them is this one, the first in Malaysia, the first retro. This so that's why I feel that Sharia scholars need to be inside, and the regulation needs to be this one. And now Tarig has looked at the piece of paper, and of course I don't have time to look at the green sukuk. Actually, it's a good video for green sukuk, but it's 2 minutes, so I better not show the green sukuk. Wabillahi taufiq. Wassalamualaikum warahmatullahi wabarakatuh.
I think that conversation was just too nice to cut off too fast. We're on our last talk. Mr. Mohammad will give us from Huda.
Nabadu nasalli ala Rasulil Kareem. Amma ba'd, fa'uz billahi minash shaitanir rajeem. Bismillahir rahmanir rahim. I would like to thanks to the organizers to give me opportunities to discuss Pakistani experience of the Takaful industry. I will start with some basic statistic of Pakistan. Pakistan have about 200 million population, and in Pakistan we do not have a dedicated regulator for the insurance industry. The Securities and Exchange Commission of Pakistan is basically regulating the insurance and the Takaful industry. In Pakistan, we follow Wakala Waqf model, and right now in Pakistan we have 50 insurance companies. Among them, 41 serving as a general insurance company, and 9 insurance companies are the life insurance company. Among 50 insurance companies, 5 are the full-fledged Takaful companies, and remaining about 29 insurance companies have a window operations. The growth rate of Takaful in Pakistan is about 25%. The first Takaful company in Pakistan was established in 2006. Basically, in SECB, Security and Exchange Commission of Pakistan, they issued Takaful rule in 2005. After 1 year, then first Takaful company established. But unfortunately, the insurance penetration in Pakistan is about less than 1% of our total GDP. The first regulation of Takaful came in 2005. According to those regulations, that is called Takaful Rule 2005, only the full-fledged Takaful company can work in the country. So when the Takaful rules came, after that we attract a lot of foreign direct investments in Pakistan, and the first 3 Takaful company which was established in Pakistan, they bring the investment from Kuwait, Qatar, Bahrain, and Malaysia. The paid-up capital requirement for the Takaful company in Pakistan, for the general Takaful companies, we have 300 million Pak rupees, which is about 1.5 million British pound, and for the life Takaful company, that is 500 million Pak rupees, which is about 2.5 million British pound. In Pakistan, we do not have a composite insurance or Takaful company. It is necessary to have a separate license for the general business and a separate license for the life business. In the Takaful Rule 2005, we have a Sharia compliance mechanism that how to ensure the Sharia compliance in full-fledged Takaful companies. And there was a training requirement for the staff of the Takaful company that at least 20 hours training for each of the staff member. After that, in 2012, the Takaful Rule 2012 came. According to Takaful Rule 2012, the conventional insurance company can also operate a window operation. So after that, a lot of conventional insurance companies jumped into the Takaful business, and 29 insurance companies took the license for the Takaful window operation. By the way, in Pakistan, we have 3 types of Takaful companies. The number 1, the full-fledged Takaful company who have 100% Takaful business. Then we have a window operation, and within window operation, we have 2 types. One window operation that an insurance company can sell insurance product through their conventional branches. Then we have a second type of window operation that is called stand-alone Takaful branches. Then some insurance company, they have their conventional businesses, but they do not sell their Takaful product through the conventional branches. They establish the full-fledged Takaful branches to sell Takaful products. And then they have a Sharia compliance criteria. In the rule of 2005, there was a limitation of only 1 Sharia scholar. But in the rules of Takaful Rules 2012, it is necessary that every Takaful company should have a Sharia supervisory board, and every window operation should have at least 1 Sharia advisor. Then they have a training requirement as well as the accounting and reporting structure. After that, Security and Exchange Commission of Pakistan issued the Sharia Governance Regulations 2018 to ensure the Sharia compliance in the Takaful industry. To ensure, and as well as it is necessary to have Sharia compliance certificate from the Security and Exchange Commission. Yes, they took the license for the Takaful, but it is necessary to have take the Sharia compliance certificate from the SCCP as well, which is valid for 3 years, and after 3 years, they have to evaluate the Sharia structure again and then renew that certificate. They also, in the Sharia Governance Regulation 2018, they also have a guideline of the charity account, whatever charity they have in a Takaful business, that how to utilize that charity. And it is necessary that in the charity account, the Takaful company have to utilize that money within 3 months. And then they have a mechanism of internal and external Sharia audit. Actually, in Pakistan, we ensure our Sharia compliance within the Takaful business at 4 levels. The number 1, the Security and Exchange Commission have Sharia Advisory Board. Whenever any Takaful company or the window operation of the insurance company want to issue any Sharia compliant product, they have to submit the document to SCCP. So they ensure the Sharia compliance over there. The second level, at the institution level, at the Takaful company level, it is necessary that every Takaful company have a Sharia supervisory board or Sharia advisor. At the third level is the Sharia audit. It is necessary that every Takaful company should have a Sharia audit externally and have to submit the report of Sharia audit to the regulator. And at the fourth level, the Sharia review, that they have to review their product annually and submit the report to the Exchange Commission. So these are the 4 levels to ensure Sharia compliance in Pakistan. In Pakistani market, we have some innovation, opportunities, and challenges as well. The number 1 innovation is the InsurTech. Most of the Takaful company, they are utilizing InsurTech. And by the way, by utilizing InsurTech product, the prices of Takaful products are going down. I'll give you one example. When I was a child, I was basically from rural area. What I observed that when I was a child in my village, when the insurance people came,